Good morning, good afternoon. This is Sebastian Hess from AIG, and today I'd like to talk a little bit about the topic of cyber risk quantification and how it fits into the larger scope of cyber risks and of actually quantifying risks. From my perspective, that is a topic and a challenge that is relevant for a lot of companies, and today I'd like to share with you the view that I have from an insurer's perspective, where we basically look at the individual risks that we insure, but we also, of course, look at the overarching risks that we see as part of the portfolio. So before we jump into the actual topic, let's set the scene a little bit. Cyber, of course, is in everyone's mind these days, and you just have to open the news or browse the internet to see a new cyber attack or a new data breach that happens somewhere. And I've listed a few examples here that you probably have seen already or heard of already, but just to visualize on one slide how dominant this problem is, I've just listed a few. And you might have even been impacted by one or the other, due to the fact that the number of customers impacted, especially by data breaches, were quite significant, sometimes even in the millions. So if we look at the threat landscape that cyber defines, it is really something that is evolving very, very quickly. If we just look back a few years ago, toward 2015, there we had about 2 billion users on the internet. We had a little over 3.5 billion connected devices, bunch of data, and a lot of websites. Looking at the scenario today, basically the number of users and the number of devices and also the data being used has somewhat doubled. But if we just look a few years into the future, we see a very, very interesting trend. Of course, there's just a linear growth when it comes to the number of users that is being connected to the internet, because there are only so many people on this planet. But if we look at the number of connected devices and the number of data that is online, there you can really see an exponential growth. So just looking at what we've seen in the recent years when it comes to cyber scenarios, data breaches, or even business interruptions, I have a feeling that the situation will get much worse over the upcoming years before it gets better. So really understanding how relevant cyber is for your business and how you will get more and more dependent on it will really be something that could determine the success of your business. And the reason for that is quite simple. Of course, most of the businesses in today's world are focusing more and more on digitization. Value generation is moving over from traditional methods more and more over to computer-aided and computer-supported value generation. Especially for the production sector, the whole idea of Industry 4.0, where basically everything is computer-controlled, is also really becoming in reality. And as already mentioned before, the Internet of Things is here, and we are adding millions of new devices to the Internet, basically almost on a monthly basis. And of course, that combined with the whole art of big data and really understanding and analyzing what we can learn about our customers and about our business is something that is by its nature also something that can be exploited. So taking all those aspects and facets into account just leads to a growth in the cyber attack surface of a given enterprise or of our society as a whole. Taking a short step back before I actually jump into the actual topic, let's also have a quick look at the claims that we have seen as an insurer within the Europe, Middle East, and Asia market. And there you can see some interesting trends. Just looking at the studies we've conducted first throughout the years 2013 to 2016, and then also for 2017, you see an interesting some interesting things. First, the number of claims that we have seen in 2017 is basically exactly the number of claims we've seen in the previous 4 years combined. So you can really see an exponential growth in cyber claims every year. And if we look at the reasons behind the claim, there you can really see that ransomware attacks are the #1 cause for a claim, followed by data breaches, and then you can look further down the list. So if we were to look behind the scenes of what triggered such a claim and such a scenario, it really a lot of times comes down to a lack of cyber hygiene, where basic security controls and basic security measures are not in place to be able to protect your enterprise from a given cyber threat. But how to deal with that, and how to be better at identifying which security controls are missing, and also what might be the impact to your business when it comes to a certain cyber scenario, is exactly the content of this webinar that I would like to walk you through now. So today I will go through the agenda as follows. I'm just going to discuss a little bit how we define risks, what we believe is of interest when it comes to risk quantification, and then really drill down into the topic on how we make risk quantifiable, and also show you in the end what is in it for you if you work with an insurer, what can you get out of it in regards to tangible advice. So let's jump right in. Let's start with the well-known definition of cyber risk, of risk in general, where you usually look at the impact multiplied with the likelihood or the probability, which gives you the risk. And for traditional risks, for example, property risks, natural catastrophe risks, this works relatively well. And we also have strong models that allow us to simulate the impacts associated with those risks when they materialize. Looking at cyber risks, that becomes a little more complicated. To begin with, it's difficult to look at historical data when it comes to cyber risks, because unlike other areas where we have hundreds of years of data, cyber is still a very new domain, and we just don't have much historic knowledge. And it's also somewhat questionable whether information regarding past events really helps you a lot to project what will happen in the future when it comes to cyber. And the reason for that is relatively simple. In our traditional understanding of risks, usually the idea of territory or terrain is a very relevant one. So usually you can draw some sort of physical line around a risk area and then analyze whatever is in between that area. For cyber, that is not so easy, because it doesn't matter whether you are an enterprise in Singapore or an enterprise cyber event. There's an art to objectively protect yourself against cyber risks or against cyber attacks. What I mean by that is simple. Just imagine you're trying to fireproof your building. There you can do easy things like a sprinkler system or fireproof doors, and therefore you objectively lower the limit, the risk of being subjective to a fire. In cyber, again, this is not so easy and straightforward, because in cyber you always deal with the scenario of a motivated arsonist, so someone who's actively trying to circumvent all the security controls you have put in place. So again, something that makes cyber different. And lastly, it is also the case that you as an individual enterprise cannot define your cyber risk in isolation. because whether you like it or not, you're always in competition with other enterprises that are working in the same sector. What I mean by that is, if you, for example, are in a finance sector and an attacker likes to attack a bank, for example, in the Netherlands, then they have a wide variety to choose from, and it is up to them to determine what is the lowest hanging fruit for them. So as well, you have a pretty good cyber program in place, and you are, from your perspective, well protected. That equation works as long as others in the same sector are basically doing a worse job than you do. But if they all of a sudden all pick up the pace and invest more in security, and you're just standing still, your cyber risk all of a sudden might increase without anything actually having changed from your perspective. So those three aspects really are strong indicators that cyber risks are somewhat different than our traditional risks and should be looked at slightly differently. So when it comes to risk quantification, what is it we're actually dealing with? So of course there are a few areas that we need to look at. There's the financial impact, of course. There's maybe also tangible impact when it comes to broken machinery, like robots or production environments. And of course, there's the differentiation between IT and OT risks. And lastly, also the risks to your own finances and environment and third-party risks. So what does it mean in detail? So trying to visualize it a little bit, here you can see the risks that are financial risks, but also tangible risks to yourself, but also to a third party. And once we map that to IT and OT scenarios, we see that financial risks are mostly relevant for the IT environment. There, if something happens, it might result very quickly in data breaches or in business interruptions, which are very heavily associated with financial impacts, either for yourself or for third parties, whereas the tangible impacts are usually neglectable. If we look at OT events, there it is slightly different. Here, the impact is really much more on the tangible side, so assets being destroyed or being at least disabled, whereas the financial impacts are less relevant. So those are definitely things that are quite relevant when it comes to trying to understand how risk quantification for cyber might work. But when we look at cyber risks, there it is of course a larger area. There are also risks associated with reputational damage or risks associated with research and development costs if, for example, trade secrets or new developments are stolen by the competition. But those are very hard to quantify. And today I'd like to really focus on the quantifiable risks, and in particular, things like business interruption, denial of service, or data breaches. So how does it work, trying to quantify risk from an insurer's perspective? So if you ever had the chance to look into cyber risks insurance, there you might know that this used to be a very application-driven process where you were asked simple yes or no questions, and based on that, it was the attempt to assess your cyber risks. That, of course, just due to the few examples I gave just minutes ago, is of course something that is very, very hard to do. So insurers are really moving away from such a questionnaire approach that focuses on simple question over to something that is much more valuable to us and also to you, and much more structured, to be able to assess the risk much better. What does it mean though in reality? So if we look at how we see cyber risks, we try to assess and define cyber risks along the following chain that you see visualized here. And let's start with the first step, to understand the business impact. So basically, that means how relevant is information technology for my business, and how dependent am I from IT or OT. If we look at the breakdown of what does it mean to have IT and OT cyber risks associated with your business, we can look at it from two aspects. First is on the right side of the slide, how is IT and OT being used in your business, and how relevant is it for your value generation? And on the left side of the slide, which risks are actually likely to occur to your given business model? How do we do that in reality? So basically, we start by gathering some general information about you as the business that is looking for insurance, trying to understand which is your primary industry sector, and then also looking at a few more details on what it is you do with your IT and data processing. And then, of course, further down, also understand where and how is IT and OT relevant for your business. And then it doesn't stop there. Then as the next step, we also like to understand how dependent are you on your IT and OT being operational. That means how likely is it or that a business interruption would incur financial impact on your business based on a few categories that you can see here. So bringing that all together gives us a nice matrix overview of how dependent your business is on your IT and OT being up and operational. And here on this matrix, you can see a few areas highlighted. So the higher the number, the more dependent you are on IT and OT in this given sector. So, for example, you are very, very dependent on servers and applications being up and running in general, and the impact of web application attacks against these servers and applications is relatively high. But for example, physical theft and data loss is even higher. And here you basically have a good overview in a very detailed manner on how impacted your business will be when it comes to cyber events. So as a next step, then it is important to look at the threat and the likelihoods of certain threats materializing. There, of course, we have several factors that come into play. On one side, we have the actual risks that are associated to the industry sector that you're in, but also the geography that you're in, for example. But then also risks that are specific to you. And here you see some examples. For example, if you have been the victim of an attack in the previous days up to a year. This then allows us again to map the threat likelihood of certain threats against the matrix that you've seen before already. And here you can see clearly that, for example, web application attacks against servers and applications have a very, very high threat. So moving on, now it's relatively simple. The next step gets us to combining the business impact and the threat likelihood to really visualize the implicit risks that is relevant for your given business. And here you can see the risks, basically the multiplication out of the business impact and the threat likelihood, generating the matrix that you see on the screen. And you can also see what the high areas for implicit risks are in this given scenario. So the next step then is something where it becomes very relevant to look at how do you approach security and what is in place to actually protect your enterprise. And there we, of course, have to get an understanding of what you have done when it comes to securing the enterprise. And this can best be done by a series of questions, which can be done via a questionnaire or via a dialogue. But the result is that with a high level of granularity, we would like to understand what your given security posture and the controls in place are. And that, of course, then results in another matrix. And here you can basically see how effective are certain security controls, basically the controls that you have put in place against servers and applications and web applications attack, for example, but also for all the other categories that we see on this slide. So now that we've understood what the implicit risk is for your given business, and we also have a good understanding of what the security controls are that you've put in place, it is time to put these two together. And there we can see a new matrix, of course, again. And here it is the aim to really understand where are security controls effective and where are they maybe lacking based on the threats that you are actually facing as a enterprise. And there you can see, for example, sticking with the servers and applications line, that the high risk in the beginning of physical theft and loss is really well mitigated for your business, whereas the risk of web application attacks against your servers and applications is something that is still a high risk. So this is something that might require further attention from your perspective. And you can see, of course, the other areas of the matrix as well, and see other high-risk areas. For example, the use of terminals again, and the threat of payment card skimmers, which is also a high-risk area. So now that we've collected all the information and we're able to assess the risks, we can of course visualize it a little bit better. So there it is very useful then to start with a cyber maturity assessment. So basically bringing together all the things we've learned, not just from you, but also from other insureds that we have, and things that are generally known within the industry due to cyber reports that get published all year round, and also to be also very honest, to take into account claims that actually have happened. And there you can basically then see a rating regarding your cyber maturity, but also putting that into context with other peers, and then also doing similar things when it comes to the residual risk and business impact and so on. So, but what does it mean now for us specifically? In the beginning, I was talking about a little bit about the high risk areas that are actually very relevant for a given business. And there, of course, we have two scenarios that cannot be overlooked, which is data breaches and also denial of service, business interruptions. So let's, in the following slides, take a closer look at how the data you've just provided to us and the information that we have as intelligence within our system can be used to turn this into valuable information for you. So based on the information that was given, now it is very easy for us to model data breach scenarios. And here you can of course, model quite a few things. You can begin with modeling the volume of records that might be breached. And you can see here that the number of records in a breach can reach from 10,000 records up to 5 million records. And you can see the probability associated with those breaches as well. So it seems a 10,000 record breach is actually quite likely for this enterprise, almost 40%, whereas a breach of over 100,000 records up to million records is really in the single digit or even below 1% area. So something that is quite valuable to know. The next step, of course, you can look at what are the costs associated with such a breach. And there you can run several scenarios. You can look at low cost or low impact breaches up to worst case scenario breaches. And here again, you can see the cost associated with such a breach, reaching from little over $500,000 for a 10,000 record breach as a low impact scenario, over to over $170 million breach scenario in a worst case 5 million records breach scenario. And taking all those numbers into account, you can then of course also simulate and display the likelihood and the probability for each scenario to really have a good understanding what is the likely data breach scenario for your given enterprise. And in this case, it seems to be an about median approach of 15.3 million. That is the expected that is the expected loss of a data breach, with a relatively low probability that it would take place. Similar things can be done, of course, for a denial of service interruption. And there, denial of service, of course, is something that is very, very relevant to a lot of businesses, especially if they're in the online segment, having web stores, or just depending on their IT infrastructure being reachable for their clients and customers. And here again, we can do a similar simulation as we did before with the data breaches. So we can look at first the number of hours of a denial of service interruption scenario. And here we can look at a scenario starting from 30 minutes over to 48 hours. And in this particular example, that a 30-minute outage and denial of service takes place is almost 100%, whereas for 48 hours, it is down to a little over 2%. Now doing the same thing as we did before, looking at the cost associated with it, it seems that in a low impact scenario, the costs start a little over $2,000, whereas in the worst impact scenario, looking at a 48-hour denial of service, the costs are well over $2 million. And then again, you can of course simulate all the scenarios in between, and you end up with an expected loss scenario from median perspective of a little over $100,000 and an interruption probability of a little over 2% for a 48-hour attack scenario. Again, something that is quite useful when it comes to modeling your internal business continuity and disaster recovery scenarios. But it doesn't stop there. Lastly, we also have the opportunity to take the information that you've given us and all the context that we have based on other clients, based on best industry practices, and based also on claims information into a context, and visualize to you what are the recommended best practices to further reduce your cyber risk. And there are several things that can be done for this given example. And on the right side of the slide, you see the actual ranking of those additional security controls. And it seems in this particular example, they've gotten to where they are today without having proper change control implemented. So implementing a good change control is the most effective and efficient security control that this particular enterprise could invest in. And then if you look further down the list, you see things like denial of service mitigation, data loss prevention, PCI DSS certification, and so on. But looking at the numbers on the right, whereas the change control is the highest ranked security control to implement, the next one is already only 1/5 as effective as change control. So if it comes down to having a limited budget and not being able to implement all additional security controls, it is a very valuable guidance to really make decisions based on control effectiveness, on where should your security program and your budget focus on when it comes to improving cybersecurity and lowering cyber risks. And with that, I'm almost at the end of my short webinar. So in summary, what we've learned is that cyber risks is something that kind of defies the traditional understanding of risks when it comes to non-cyber scenarios. So we need to deal with them slightly differently due to the fact that cyber defies territory, but it also always deals with a very motivated attacker, where you can either be collateral damage due to the fact that the security controls are just not good enough and you were impacted or infected by a random, for example, ransomware attack, or you are really in the target of a motivated attacker that tries to breach into your enterprise. So looking at cyber risks, it's from our perspective, it is the most valuable to look at it from a business impact and likelihood perspective, but then again, looking very particularly at the security controls that are in place to really then understand the actual cyber risk in a very granular manner that is relevant for your business, and then based on that be able to run very particular scenarios related to denial of service and data breach, but also give very, very tangible recommendations when it comes to where to put your security money in order to improve the security controls. And with that, I'm actually at the end of my webinar, and I would welcome any questions that you might have. Thank you for listening.